Imagine waking up one day and discovering you've accidentally lost $100,000. Not because of a stock market crash, not because of a scam, and not because you chose the wrong investment, but because of a mistake that feels completely safe, a mistake that millions of investors make every year. And the worst part, most people never realize how much it's costing them until it's too late. Today, I'll show you exactly what that mistake is and why avoiding it could completely change your financial future. The truth is that investing isn't just about making money. It's about making time work for you. And when you make this one mistake, time starts working against you instead. Meet Williams. At 25 years old, he decided he wanted to build wealth and become financially free. He opened a brokerage account. He started learning about investing. He followed the markets. But every time he thought about investing, something stopped him. A voice in his head kept saying, "What if the market crashes tomorrow?" So Williams waited. He convinced himself he was being careful. He believed he was making the responsible decision. Then the market dropped. A few months later, the market recovered. Prices started rising again. And instead of investing, Williams worried he had already missed his chance. So he kept waiting. Weeks became months. Months became years. Before he knew it, a decade had passed. And that hesitation turned out to be far more expensive than any market crash. What Williams didn't realize was that his biggest enemy wasn't the market. It was hesitation. Most people think successful investing is about picking the perfect stock, but that's usually not what creates wealth. The biggest factor is time. The longer your money stays invested, the harder it works for you. Imagine investing $500 every month starting at age 25. Nothing fancy, just consistency. Over the decades, those small monthly investments can grow into a life-changing amount of money. Now imagine waiting 10 years before getting started. You invest the same amount, you earn the same returns, yet you end up with dramatically less wealth. Why? Because money doesn't grow in a straight line. It grows through the power of compounding, a force so powerful that small amounts can become enormous over time. Think of a snowball rolling down a hill. At first, it barely grows, but as it keeps rolling, it becomes larger and larger. That's exactly how wealth is built. Let's look at a simple example. Suppose you invest $10,000. After 1 year earning 10%, your investment grows to $11,000. The following year, you're not earning returns on $10,000 anymore. You're earning returns on $11,000, then $12,100, then $13,310, and the cycle continues. At first, the growth seems small. It's almost boring, but eventually, the growth begins to accelerate. And that's when compounding becomes truly powerful. Unfortunately, many investors never reach this stage because they become impatient and quit too early. Another mistake investors make is trying to time the market. Everyone wants to buy low and sell high. The problem is that nobody consistently knows when the perfect time is, not even professionals. When the market falls, fear takes over. People panic, and many investors sell. Then the market recovers, and those same investors are left watching from the sidelines. Studies have shown that missing only a few of the market's best days can seriously damage long-term returns. That's because the best days often arrive right after the worst days, exactly when fear is strongest. Investing isn't really a math problem. It's a psychology problem. The market constantly tests your emotions. The investors who build the most wealth aren't usually the smartest. They're the most disciplined. They keep investing month after month, year after year, regardless of the headlines. And that's the $100,000 mistake. It's not choosing the wrong stock. It's waiting for the perfect stock, waiting for the perfect market, waiting for the perfect opportunity. Because every year you delay investing is a year your money loses the chance to compound. And unlike money, time can never be recovered. 20 years from now, you'll either be grateful you started today, or you'll wish you had. The choice is yours. If you enjoyed this video, don't forget to like, subscribe, and share your biggest investing lesson in the comments. Thanks for watching.